So, Glenn, thanks very much for being with us. The big question on our minds is, what do you see the difference being between successful startups and those that fail?
All happy families are alike. Each unhappy family is unhappy in its own way. Put that into startup terms, all successful companies are alike. Each unsuccessful company is unsuccessful in its own way. And the reason why is because, just like that saying from Tolstoy, there are a lot of ways to fail, but only a few ways to succeed. And so successful companies tend to actually look a lot alike. But the unsuccessful ones always fail for like one of a zillion different reasons. So if you try and find the reasons why people fail, you find a zillion reasons. If you try and find the reason why people are successful, you find a small number of reasons. So I can't answer the question as to like why it comes out unsuccessful, because it's like an infinite number of reasons why they're unsuccessful, right? What I can say is, here are the things you need to have to be successful. And if you don't have those things, then you're not successful. And when you say what's important, it's kind of like asking a family, like what's important to the family, and whatever they don't have, it's got to be like a key cause of unhappiness. I think it's actually a matter of, in terms of priorities, it's not really prioritization, really, perhaps. It's actually probably more around of, do you have these things? Some of those things that we talk about, though, are capabilities. And if you have the capability, then you can generally get some of the other pieces, right? Mm-hmm. If you lack those capabilities, then you lack the resources to get those things. Taking it back to Tolstoy's quote, which I think is very appropriate for this place. So I think for companies, it basically comes down to those small handful of things you need to actually have, and then you need to utilize to get everything else that you need to have as a company. Does that make sense?
Yes. And I can't wait for you to tell us what those handful of things are now.
Okay, so it's, do you have the right team? Because if you've got the right people with the right capabilities and the right drive to action and all those things, right, the kind of human characteristics around them, people that are charismatic enough to, have other people willing to work for them, that are not, fundamentally broken, they're not narcissists or psychopaths or many other failure modes I've seen for startups, frankly. When people say team, they really mean they've got the domain skills, they've got charisma, they've got networks, they're not broken people, like they're people that people would willingly work for, they're smart enough, all those kind of things, right? So it's like, those are all the characteristics of the starting group of people that you need to have, right? Passion and drive to solve the problem as a human characteristic as well. If you don't have those, you don't have the human capability to solve any other problem. Like, you just don't have it. Or they're someone who I've seen before where they're a great, scientist or engineer or something like that, but they just don't have the personal characteristic charisma. So I think that's number one, is actually getting the people, which is basically the human capability to go in and achieve the rest of the items. And I think number two for successful is actually in a market that's successful. You can be the best at what you do, but if nobody wants it, it doesn't matter. So you need to be in the right location, kind of in a virtual sense. One of the points I'm making in my talk is that it used to be said that software was eating the world, and software, the US IT software and services industry is growing at 11.6% compound annual growth rate. Right, that's pretty good. Definitely better than the market. The AI space is growing at 33 to 38% compound annual growth rate. Right, that's a good market to be in. Because basically that's a growing market, right? If you're in a market that's growing at 1% per annum, that's a terrible market to be in. It's incredibly hard to actually win in that market, right? You've got a lot of headwinds against you. So I think you need to be in the right location. And by location, it basically means the right space, right? You need to be in the kind of right space, or else you just got too much. You're gonna have to fight against the headwinds. I think the third one to me is actually that you need to have a product or a service. The ones actually people want to buy. But note that's kind of like, to me, that's an output of the first two. It's kind of the first of the outputs. So if you've got the right team, you're in the right space, then you should be able to get the right product. But it's probably the most important of the outputs. So I actually have to say, if you really need two things, it's the first two, and then you start getting the third one. And everything else to me beyond that is just, an outgrowth of the first three. That's why I always pick those as my three things. When I say, what do I look for in a startup? I'm like, it's those three things. Because everything else will flow from those three things, right? So it's actually really simple.
Glenn, I'm now curious specifically around the people, because that's kind of like a huge topic. When you're meeting for the first time a startup team, what are you intuitively and academically looking at and looking for in terms of the people?
Okay. The person is passionate about the space. So they've got sufficient energy and drive to get them through the bad days. They need to have that drive, energy, passion to kind of to push through those kind of moments, right? Purpose, they got to have that. It's kind of obvious. Like when people talk, it just kind of comes out, right? Like a negative sign for that is they go, "Yeah, I've got like 6 things I'm working on." I'm like, You know, unless they're like 6 things that are all the same thing but in different ways, then if there's 6 different things, then that's not good, right? You should see how they thematically fit together. Second thing is they need to have sufficient domain knowledge to be able to speak intelligibly about the subject. So if I know as much as them about the subject, it's a really bad sign. You know, they should know a lot more about the subject than I do, right? Thirdly, they need to be smart enough for the problem space. Smarter is better, but you know, not everyone has to be, in fact, like super smart. Actually, they need to be smart enough to do what they're doing. Because somebody smart is more likely to be able to work out problems, you know, as they go along. So it's useful. So okay, and last one is they need to be charismatic enough. Talk to a lot of scientists, engineer types, and they don't know how to lead people, and they need to be a leader. And so they need to be able to bring people on the journey with them. That doesn't necessarily mean they have management skills or experience, you know, but if they can't convince me that they're, you know, excited about the thing that they're doing science on and get me like motivated about it, like feeling a sense of, oh, wow, this, you know, like I feel like gelled up, you know, woo, you know, about it, then how are they going to convince anybody else ever?
Yeah.
You know, so they need to have that enough charisma, you know, to do the job. Now, I'm kind of like saying this almost as a collective. Like I'm talking about individual characteristics, but I'm actually referring to a whole team here. So the team needs to have these characteristics.
Right. That's
Right.
important. Okay.
Yes. That's probably maybe the last thing I look for is that, you know, it's a combination of all these things that manage to attract other people that are talented people around them.
So the ability to attract other talented people. So is it?
Yes. So sometimes frequently the team is actually like one person had the initial idea and then they've grown a team. You know, and they're not necessarily employees. It could also be co-founders or, you know, kind of early employees or advisor investors or whatever, you know, but they've managed to attract other talented people. So that's what I think about the team. I rejected people for all those reasons. I rejected people because I'm like, great idea. You've got the smarts to do this. You've got lots of domain knowledge. No one's ever got to follow this person to the corner store. Exactly. So go find a co-founder who can do that with you, and then we'll talk again.
Yeah. I was going to say, this is hence the importance of having a team of people and not being a single founder, which is something I've heard before. Yeah.
Yep, it's hard. And the other reason that being a single founder is hard is that psychologically it's hard. You've got no one to lean on. Like when the chips are down, you know, you got to know who you got to talk to. So a co-founder is in a different headspace than even a good mentor or advisor. They're just different. Yeah, because they're sitting beside you in the trenches.
So that leads me to think, Glenn, around what I was hearing about your WA fund and how you're talking about the 3 options. The option of, yes, we'll invest, the option of no, we won't, and then your maybes. So I'm now curious around how do you go, okay, they're a maybe rather than a no or a yes?
People have strengths, right? I mentioned about, in fact, actually, I mentioned a Tolstoy quote because that's actually what we find. Like when we assess companies, the good ones are good in all directions. The bad ones are bad. The really bad ones are bad in all directions as well, actually. The ones that are kind of in the middle are like, you have something that's really good, but you've got a fatal flaw or two. And some of those fatal flaws are fixable and some of them aren't. And so the fatal flaws that are fixable, we can help fix. The fatal flaws that aren't fixable, that's going to be a no. And fundamentally, the unfixable ones are the ones that can't be changed. They're in the wrong market. Or the team is just wrong. So when we look at the maybes, we're looking for, they have good strengths and weaknesses. And the weaknesses is because they don't know they have weaknesses, rather than just being weak overall, because then there's nothing we can do with them.
I feel like I can hear your internal cogs going now when you are looking at people with your assessment criteria. It's really, that's cool. That makes sense. I was going to ask, what else do you see in the maybes that converts them to the yeses?
It's either a weakness where they have not yet addressed it, as in like, oh, we know we should do this, but we haven't done it yet. And they don't quite know how to do that yet. And they haven't put the effort in yet to fixing that because they've been working on something else. Another one might be their business plan is not appropriate for a venture scale business. You know, they've set their sights too low. Or it could actually be that they have not encountered what a venture scale business actually looks like, and therefore the business plan is a little timid. That's a knowledge gap. That's rather than a skills gap. You know, they just never encountered that environment. You know, therefore they've not learned it, but they could learn if they get taught.
Yeah.
Right. So
coachable problems. Yeah,
actually, coachable is another team characteristic.
Okay. Tell us more. Yeah. What's that mean?
So someone who's uncoachable is just, they're so confident, they're overly confident, and they're so egotistical, they're overly egotistical, and no, I'm doing it, and I'm just going ahead with it.
Mm.
And they don't listen.
Because you can't really work with them if they don't, correct?
Yeah. Actually, it's probably another characteristic there as well, which is, it's probably fits in the charismatic piece, which is, if I'm funding someone, I'm basically marrying them for the next 10 years.
True.
So I need to actually, like them well enough to be willing to talk to them frequently.
Yeah. That's what I heard when you said charismatic is generally a likability characteristics. Like they just need to be likable.
Yeah, they need to be likable enough that people will work with this person.
Susie, any final questions before we move to the next?
No, I feel like I've had a really great exposure to Glenn's mind and how he analyzes people. And there's I can hear the real connection. And again, unsurprisingly, Glenn, this is similar to what we are also hearing from other investors, purpose, passion. I suppose my curiosity from your perspective, and this is kind of going off script a bit, is because I've worked in business with people, big people, like big businesses rather than startups. But the thing that I have found, if people aren't self-aware, and by self-aware, I'm really meaning they understand the things that are really important to them and the things that piss them off or the things that give them joy, and if they can't articulate that, then it's really difficult for them to create any sort of culture, partnership, because if another person has a totally different set of values, I'm going to call them, which are really different and aligned, then you're going to always have clashes, because the dynamics of the team are ultimately, I would say, based around the value fit of each other. So for instance, myself and Isis, do we have similar value? Because if we don't, eventually down the track, we're going to clash. So is that something?
Like, I'm assessing the team,
okay,
not individual. As a team, the team needs to gel as well.
Okay.
Right? Like if the team is, not gelling, then they're not going to work together, right? So.
And how do you see that? What are you seeing when they're working together?
I find that really hard to assess quickly, though. Like even someone who's not naturally outgoing, who in a meeting will be like pouring forth their energy and passion, and then they go back and they will code for the next 3 hours. Teams can do the same thing, right? Where they can actually look like they're gelling, they smother all their problems. They're like families. That's why I use the family analogy from Tolstoy, right? Quick, visitors coming around. Let's make like the Simpsons. Let's pretend we're like a nice, normal family, right? The problem is that while someone only needs to be outgoing and passionate in spurts, they don't need to be like that 24/7. They actually kind of need to get along 24/7. And I can't tell when they're not getting along because I'm not there.
Yes.
Right. So I don't know how to really truly assess that in a predictable way. I guess if they're so dysfunctional that they will do it in the middle of a pitch meeting, but that doesn't really happen.
So I think what I'm hearing is that the value connection is really important, but and this is what we're finding, because the startup, that word and even understanding it is so like, what does it even mean? And it actually doesn't come out. The misalignment often doesn't come out until a bit later when they're hiring people and suddenly they're going, something's going wrong. And it's actually because that person thinks very differently about things.
That's right.
So if this is really important and you're saying it's very hard to determine this at a pitch, then how do you make the decision to put your money and marry them how do you do that?
A lot of the time you can kind of have an inkling about it based on their background, actually. You kind of get a sense of why they're in the team, like where they come from, and get a sense why they're there. So you might find the CFO who looks like a standard CFO, right? And they're in the team and they're part of the founding group or early employee or whatever, but they've been a CFO their whole life and they're still a CFO. For them, it's just another CFO gig, fundamentally, right? I can't ask them that question in a way they're going to give me an honest answer, nor can I even work that out quickly, otherwise. But I can kind of guess it based on, their background, have a pretty good shot at it. I don't have a systematic way of working that one out because I think it's just such a human thing, to do. And you kind of have to suss out what makes this person tick, and a bit of background is helpful around that.
So a lot of intuition based on years of experience and knowing what works, what doesn't.
Pretty well. That's right, yeah. The other one that's hard to work out is when someone's a narcissistic sociopath, because there's a lot of them in startup land. They're actually very charismatic. They're great leaders, you know, and they're fantastic until the wheels fall off. And they feel wheels fall off frequently because they exploited them off. Like, you know, because it's all about them, right? And they don't tolerate failure well.
Founder Institute has a comprehensive test, and one of the things that they look for is this tendency. And we've rejected, when I was running it, rejected applicants based on this.
Yeah. Well, I've gotten a lot better at picking them because I've seen them several times.
I think that's amazing. Thank you for all of those insights.
So insightful. Super insightful. Yeah.
Yeah. I mean, it's great because the themes are all coming through.
Yes. It is such a joy when you start to hear, you know, when you talk to investors, you talk to a customer group and they start saying the same similar things, that it's congruent. It's so interesting and exciting, I think.
I'm curious if there's something significant that other investors said that I did not.
Not obviously.
Yeah. No. Almost the same words even.
Yeah.
Purpose,
Okay.
passion, drive. I mean, we haven't talked to investors overseas, I suppose. There is a bit of it at the moment. They're all Australian, WA. So it'd be interesting.
I would talk to some overseas. Yeah, it's a different market.
Yeah.
And we do look for different things. So.
Yeah. Oh, that's interesting. What tell us more about that.
Well, it's because the Australian market financially is different than other investor markets elsewhere. So Y Combinator wrote a letter to their companies, their Y Combinator companies, basically saying, look, big downturn, funding is going to be hard. You know, if you're post Series A and haven't found product market fit, then you really should go find product market fit. But they're also further down the curve, right? So if you look at investing as an efficient curve, and you're trying to find things that are on the efficient curve, right? So when people talk about venture capital returns, I say ideally venture capital returns will be slightly above market rates, because if you haven't, you've left money on the table. You know, so as an industry, we have left money on the table if we're not, you know, at market or slightly above, right? Because we miss opportunities to earn above market rates investing in things. So a mature industry should kind of fit in that kind of basis, right? Where all the best deals are taken and all the second best deals are taken, all the third best deals are taken, all the down the chain. Right? So that's kind of how it should work. So something like the US market is a mature market of venture capital. So therefore, they're going to invest money in the fifth best idea. So I look at the amount of money sloshing around, and some of it is just a factor of the amount of money available, as in the free capital looking for a home. But then that free capital goes, well, what I can earn X% on the share market, or I can earn X plus a slight amount investing in venture. So I'm doing X plus a slight amount, because a slight amount is still better than nothing. So that's why.
Whereas in Australia, WA, we're looking for much higher gains because the risk is higher. Is the risk higher?
I think the variability is higher.
Okay. Yep.
I'm not sure the risk is higher. Risk, perhaps you could look at as variability, but I look at that as a different property. Risk is pure negative downside. This is more like you don't know what you're going to get, right? And so it's undoubtedly not a Gaussian distribution in terms of risk. It's not just a pure like, here's what you're going to get and it might go to zero. So I would say we are definitely more risk adverse market though.
Yeah.
And so therefore you kind of almost have to promise a higher rate of return, because they're not interested in making slightly above market rates, which means you basically have to swing for the fences a bit harder. You have to aim for higher returns to make it worthwhile.
Interesting. Yeah, because we're competing with mining and more known, dig things out of the ground type of markets.
Exactly. So yes.
Interesting. Okay, sorry, could talk about this for a while. It's very interesting. But I think we should put ourselves in the hot seat, hey? Now, flip things around. Yeah.
Okay.
So just to give you a little, just to catch you up from when we last spoke, when things were very, very, very nascent. As Susie mentioned, we interviewed a whole lot of startups, and then we did some quantitative sort of surveying type work as well. Came to the conclusion there's a bit of disconnects and delusion. The questions that related to more commercial sides of startup were always rated as very important. And then they didn't rate the things that are, I guess, the more emotional, psychological aspects of a startup, like ability to make decisions, time, etc. Right? So it wasn't as important. But then when we asked them how you're going on all of those things, they would say that they're actually doing really well on all the commercial sides. In terms of the things that they're struggling with the most, it's actually the more emotional, psychological aspects, like
that's right. Yes.
Decision making.
Oh, by the way, to be clear, I do say no on commercial reasons all the time, but the commercial reasons are a second order, right? They're an output of the first parts. So.
Which is interesting. So we felt like that's what we meant, I guess, by that delusional aspect. We think some of these things are important, but actually we're doing great at them and other things are not.
I think that's what we were coming at, wasn't it? There's not enough pain. They're deluded enough to feel like there's no pain in the spaces that we want to support them in.
Well, no, here's a good example. Actually, here's a personal example. I have a personal trainer. He's on video call, and I lift weights and do things on his division, and we discuss matters, and he adjusts my programs based on how I'm going that day or how things are going or whatever. Right. So I do that because basically being physically fit helps me in all areas of my life. Because actually I need the stamina to get through the day. I also have a psychologist who I discuss things with. And we discuss programs, and we discuss, and she gives me exercises to do. I literally have homework. I have to write it down and do it. In my worldview, those are both trainers. I see them not because I'm broken. I see them because I need to be better. I see a physio for my ankle, which has a problem. When my ankle is better, I will not see them anymore because I'm fixed, right? I'm going to see my personal trainer forever because I'm training to be better, right? Different problems there, right? So this is very analogous to what you're talking about here, though, where people will see one kind of trainer, and they won't see the other kind of trainer. Okay, right? Everyone I speak to about that says I have a mental trainer as well as a physical trainer. Everyone's like, that's amazing. I'm like, well, yeah, it's because I'm limited by my here.
Yeah.
And sometimes limited by here too, right? I'm too tired to work. Okay, right. And other times it's because I'm not in the right headspace to think about things in the right way, right? So I think the problem you're facing there is the same. People aren't willing to pay for that one, even though actually that has a much bigger impact, on them than actually anything else.
Exactly. And that's the market that we're targeting, is exactly those startup founders who want to get better, not the ones that only see someone to fix. And we feel that those are potentially the startups that have the highest potential of investment as well. What we're really passionate about is helping founders thrive. So that's where we're coming from, that the premise that the focus shouldn't just be about startups and having noodles and surviving on 4 hours of sleep is just not sustainable. We want founders to thrive beyond their first startup.